PayPal is a company that's been struggling for the last 4 years. Today, we're going to dive deep into if PayPal is considered a buy, in my opinion, or should we stay away from this falling knife? You could say the business model as well as the excitement with investing in PayPal really peaked back in 2021. PayPal was growing revenue at a 30% year-over-year clip, and the valuations for the company were getting really insane with a trailing P ratio around a 60. PayPal really peaked back in 2021 because people were stuck at home buying everything online, and PayPal has a little bit more business geared towards online transactions, whereas Visa and MasterCard are a bit more powerful and the day-to-day type living. From that time, PayPal dropped 83% in stock price, going all the way through to October of 2023, when many other growth stocks bottomed. PayPal has struggled to see any momentum in its stock price. At times, it's been up around 60-70% from that bottom, but even today, a couple years later, PayPal is only up around 30%. And this comes at a time when we've just had earnings from PayPal, which they came out with a double beat a few days ago for the second quarter of this year. They beat their earnings per share target by 8%, and their revenue came in at 2.5% higher. Both decent beats for the company, and the stock has really been rewarded by around a 15% drop. So this could be a time when we can beat Wall Street, get a stock that's had a decent sale, and maybe be a worthwhile investment over the next 5 years. However, before we start talking about stock prices or even forecasting about future profits, we need to understand how PayPal makes their money, and if we can see PayPal grow strongly again back like it did a few years ago. PayPal makes its money through two broad methods. They charge you fees with any transaction they facilitate, but also when you transfer money from friend to friend. And they also have a more business services type area like Braintree, where they'll do, yes, transactions through a website for maybe an e-commerce business selling clothes, where you could get information such as total sales, but even things like average ticket, which means every time they go to the shop, how many things do they buy and how much do they spend. But I would say the most important categories of PayPal would be their PayPal branded business, which is still by far the largest category, which we'll talk numbers a bit later. But the most exciting business and one of the fastest growing that PayPal offers is its Venmo business, which is about transacting money and sending money to friends, family members, and PayPal takes their tiny little about 1% fee for that transaction. And just in the last year, we've got some really interesting outcomes. We've had Venmo, the total volume of transfers, that grew 45% in the last year. And we also have Buy Now Pay Later, which is offered through the traditional PayPal checkout online. That grew by over 20% in the last year, which is an exciting part of the business, but it's one that personally I'm not that excited about. And PayPal, even a few years ago, sold off all of their Buy Now Pay Later assets. And that's really where the positives end. You have to admit, Alex Chriss, the new CEO, really has a way of selling the company and maybe coming up with some great innovations. However, the story about customer growth and true revenue generated from these different ideas isn't really coming through in the financials. The first group of data here that does not look very good is the amount of active accounts. And yeah, we've had a 2% yearly growth in the number of accounts, but when we have a look again at number of payment transactions, that's actually down 5%. So if anything, we have less active users over time, well, compared to the last year. But that's been a story that's been a struggle for PayPal, really going back to the peak of the business back in 2021, especially when we compare PayPal against its biggest competitors, Visa and MasterCard. I made a video just yesterday talking about Visa stock, and Visa is still growing the number of cards out there, debit and credit, by 7%. Whereas PayPal, in terms of active people, is actually shrinking. And that's fundamentally why PayPal is worth less than half of what Visa is. Branded checkout, for example, which is PayPal Online, that is 29% of the business, and it's only growing transactions by 5%. When we have a look at payment service provider, that's the business-specific service doing their transactions for them online, that's only growing at 2%, and that is 44% of the business. Some of the most exciting parts of the business, such as Venmo, that's only 18% of total payments, but that's growing at 12%. We are now going to dive even deeper into the financials. What I've got here is the income statement from PayPal for the last quarter. And even though we've got all of that negative news about the transaction growth and active users pretty much going down, less transactions per account, we are still seeing revenue growth up 5% year on year, which is pretty impressive for the fundamentals, not looking that great. So for whatever reason, if PayPal in the future, if they can get all of those exciting innovations to truly translate to higher revenue, then that could actually mean revenues are up 10, 12% because the business is definitely not firing on all cylinders right now. I do have a few more pieces of good news that do come out here, and one is their expenses are definitely under control. Pretty much all of the expenses of running the traditional business, from sales and marketing to technology and general and admin, transaction expense, they're all growing either at a pretty much flat rate, or some of them are actually down around 20%. There's only a couple areas that are growing expenses around 30% year on year, which is pretty crazy. Some are down massive, some are up massive. A lot of that could be associated with the growth in buy now, pay later. PayPal's expenses could explode if people, for example, see unemployment rise and lose their job. But moving on through to the earnings per share, we actually saw a 20% growth in EPS. Now that's pretty exciting considering most of the fundamental business is not doing that well, but because PayPal is so cheap, and for example here, we're gonna have a look at share buybacks, they're buying back $1.5 billion of shares every single quarter. If we also add in the $260 million of stock compensation, that's a bit better than a few years ago as a total percentage, but still, that's costing the business some money and effective share buybacks. If we take both of those sums of money into account and annualize that effect, then really PayPal is retiring around 7.6 of total shares on a yearly rate. And that's a huge reason why the company, its revenue growth is kind of weak, is keeping its expenses under control, but literally because the company is so cheap, it can do extensive share buybacks. Its balance sheet is actually pretty healthy. It could easily keep this up for like another 10, 20 years into the future. Plenty of money to go around, which is one of the big benefits of being a financial based company with very low cost. And that leads us to the final story of PayPal, which I've already mentioned a few times, is their insanely low valuation. At a forward P ratio of 11.5, PayPal is worth less than half of Visa stock. And because of PayPal doing that extensive share buyback, their earnings per share growth is probably looking at around 12 to 15%, depending on if they can keep their expenses under control and get their revenue growth growing just a little bit stronger. They could even get up to earnings per share growth on a real positive bull case of around 17%. And we see this nice pattern of PayPal stock actually bottoming in valuation around a 12. When we get below a 12, usually that's a pretty decent buy, and the only time that has not worked out in the last 2 years has been the April sell-off. Even if you did buy PayPal like back in March of this year, went through that sell-off in April, you can always have that experience of just buying more shares, averaging down your price, and PayPal from those lows went up around 50%, which is a pretty decent performance for only a few months in the stock market. However, I've just recently invested in Visa, and I don't want too many companies of the exact same type in the portfolio. I'd love to add to PayPal if the price is still nice and low over the next couple months. I'm going to keep my eye on it, but I do not actually own PayPal right now. And obviously you watched all the way through to the end. You love these videos. Make sure you hit the like button and subscribe to help this small channel keep on growing, and we can keep trying to beat Wall Street on this channel together. I'll see you guys next time. Bye.